Hello everyone. Let's discuss and understand the term discount. Students, when you visit the market in malls, on some of the shops, you find banners, you find hoardings, stickers, 40% discount, 50% discount, 20% discount. What is that? You also know that. That is deduction. Deduction in what? Normally, if MRP of the shirt is 1000 rupees, you know that, and 50% discount, so you understand that shirt of rupees 1000 you are going to get at 500 rupees. That is what? That is discount. So discount simply means what? Discount is a kind of allowance allowed by the seller to the buyer, allowed by the sellers to the customers. And in simple language, it is a deduction allowed by the sellers to its customers. But is it enough from accounting point of view? No, students. We need to understand the exact meaning, types, and accounting effect of discount. So, two types of discount is there. Any discount can be classified into two types. One is trade discount and second is cash discount. So students, firstly, we are going to discuss trade discount. Trade simple means purchase and sale of goods with the purpose of earning profit. That is what? That is trade. It simply means discount is a deduction allowed at the time of trade. It means allowed at the time of purchase and sale of goods. That is a trade discount. And further, I would like to add that trade discount is the discount allowed by the sellers to its customer. Who allow it? Seller, the vendor, allowed by the sellers to customers. Why? Just to attract the customer and in order to promote the sale, in order to increase the sale. And remember one thing, trade discount is neither a loss to the businessman and nor a gain to the buyer, gain to the purchaser of the goods. Why it is so? I tell you with the help of an example. Just see. Example is sold goods of MRP, sold goods of MRP of rupees 50,000 at 20% trade discount. Now question arise, we sold goods of MRP. MRP is maximum retail price. This is the catalog price. This is the list price. It means the price which is listed on the product, that is called the list price, catalog price, or the MRP. We sold goods of the MRP of 50,000. At what price? At 20% trade discount. It simply shows that 50,000 is not our sale. That is the MRP of the goods sold. Then what is our selling value, which is to be recorded through the books of accounts? I tell you, see, MRP right here, MRP rupees 50,000 less trade discount at the rate 20%, that amounts to rupees 10,000. 20% of 50,000. Then the selling price, which is to be recorded through the books of accounts, amount to rupees 40,000. Goods of 50,000 sold at rupees 40,000. 50,000 will not be recorded through the books of accounts. 10,000 will not be recorded through the books of accounts. Why? because this 10,000 is not a loss to the seller. It is not a gain, it is not a profit to the buyer. Why so? Try to understand. In order to promote the sale, in order to attract the customer, what the sellers do, he added it. Actually, it was the product was of rupees 40,000, but in India, there is a habit of bargaining also. Until unless the price is deducted, customer is not satisfied. In order to satisfy them, some amount is to be deducted. It has become the habit of the customer. So looking at this habit, the sellers are in a fix, they are in a problem. What they do that they have to sell the product at rupees 40,000. Yes, they know it, but it cannot be directly sold at 40,000. What they do, they fix the price 50,000 rupees deliberately, knowingly, and then deduct 20% of that. It means ultimately they sold the product as a price at which they wanted to sell it. So this is not a loss, this is not a gain to anybody. Neither the MRP nor the trade discount is recorded through the books. What we record through the books, the net price. This will be recorded through the books of accounts, right? Like in this transaction, journal entry will be cash account debit to sales account. So student, this is what? This is a trade discount. Trade discount, simply, now I think you are getting this point, that this discount is allowed to attract the customers only. Firstly, deliberately the price is increased and then it is decreased by the name of trade discount only, so that customer is also satisfied, product is easily sold, and the seller earns the profit which they want to earn. So this is the game of trade discount itself. Now let's discuss cash discount and its effect in accounts. Students, cash discount is very much different from trade discount. Whereas trade discount is allowed to promote the sale, but cash discount is allowed to encourage the customers for making quick payment. You know that in most of the businesses, goods are sold on credit. Whenever goods are sold on credit, that is termed as credit sale. And once credit sale is made, it simply means amount is to be recovered after 15 days, 1 month, 2 month, 3 month. But the businessman wants that payment should be received immediately or before the due date. It means the businessman wants early payment, but the customer is not ready to make the early payment. Then there is a tactics adopted by the businessman, the tactics of cash discount. They give an incentive to the customer that if you make the payment immediately, we allow you 2%, 3%, or 4% discount, whatever the industry practices. And this is the way the customer is encouraged for making immediate payment. And this cash discount is a loss to the businessman who is to get the payment, because they are getting less payment comparatively. I just try to explain it with the help of an example. It is received rupees 9,700 from Arun in full settlement of rupees 10,000 rupees. It means Arun is our debtor. In the past, we must have sold him goods worth rupees 10,000. He is our debtor. In order to receive payment immediately or before time, what we did, we allowed him a discount of rupees 300. See, total amount to be received 10,000 and we received only 9,700. So rupees 300 is the cash discount, and it is a loss to us. How it is a loss? Because on the due date we are going to receive 10,000, but we want the money immediately, and we offered an allowance, say, or a deduction to the customer, and he accepted, and ultimately we incurred a loss of rupees 300. Now this is our loss and this is a gain to the customer. In our books of accounts, this loss of rupees 300 will be recorded. Now I think you are understanding the concept cash discount. Trade discount is not recorded, but cash discount is recorded. See, what is the journal entry? We received cash, how much? 9,700. There is a discount, how much? This is called a discount allowed, because we allowed the customer to make less payment, 300 rupees, and the person who is our debtor, Mr. Arun, his account has been settled for rupees 10,000. Now, what will be the journal entry? Cash is a real account. Debit what comes in, it will be debited. Discount allowed is a loss. Nominal account, debit all expenses and losses, it will be debited. And credit the giver, Arun, he will be credited. See, so journal entry will be cash account debit, discount allowed account debit to Arun's account. It means by receiving a payment of 9,700, Arun's account of rupees 10,000 has been settled, and this is a loss to the businessman. But it is not the case that we always incur loss. Sometimes we also, get gain or profit whenever we make less payment to our creditors. I am taking one more example. See, paid rupees 11,800 to Rohan in full settlement of his account of rupees 12,000. See students, this is a case of gain earned by us. In this case, Rohan is our creditor to whom we have to make a payment of rupees 12,000. But instead of 12,000, we made a payment of rupees 11,800. And in this case, we are earning a gain in the form of discount received, and that is our gain. So how to record this? See, how much gain? Total amount payable was 12,000. We paid only 11,800. So discount received is rupees 200. Now this is our gain. This is to be recorded through the books of accounts. How to record this? Again, there are three accounts: cash, second discount received account, and third one Rohan's account. See, Rohan's. How much cash we paid? 11,800. Instead of rupees 12,000, we paid only 11,800, and gain is 200 rupees. Whose account has been settled? Rohan's account for rupees 12,000. Then see the effect on account in accounting books of accounts. Cash, real account. Credit what goes out. Whenever cash is outflowing, we credit this. Discount received, it is a gain, nominal account. That's why it will be credited. Rohan is our creditor, and whenever account of creditor is settled, naturally he is or she is debited. So Rohan is a personal account. Debit the receiver. He is receiving amount. Now you will say he is receiving only 11,800. No, we are paying 11,800 in full settlement of 12,000. It means by paying 11,800, we settled his account for rupees 12,000. His account will be cancelled by written off by 12,000 rupees. That's why debit the receiver, his account will be debited. So students, one thing should be clear to you. Discount allowed, trade discount is not recorded through the books. It is rather deducted from the MRP and the net amount is recorded. But as far as cash discount is concerned, I have taken two examples. Listen the lecture carefully. If we make less payment, that is a discount received, gain to us. But if we receive less payment, that is a discount loss, discount allowed, and a loss to the businessman. And accordingly, that is recorded through the books of accounts. I think the concept of trade discount and cash discount is clear to you. Subscribe the channel if not yet subscribed. Share the video with your friends and classmates. And if you want to watch these videos in Hindi, then visit my another channel, that is Commerce with Difference.